Welcome to She Said That Out Loud, a place where we have inspiring, simple dialogue of our thoughts and ideas about concerns we face today. Up next, a conversation with Ashley Carroll, Senior Finance Consultant at First Capital Funding Group.
My name is Ashley Carroll. I am the Senior Finance Consultant for First Capital Funding Group. We are available to assist individuals who are attempting to get financing for their personal or business needs. Our niche is business financing. However, we do assist individuals with some personal financing as well.
It's important to discuss the personal finances piece. So let's start with, how can someone prepare themselves if they're looking to purchase a home or start a business?
Okay. Well, the initial first step with any individual who's trying to borrow money is to make sure that you are able to acquire the financing. So you have to be eligible to get the financing that you're looking for. And in order to be eligible, you have to have certain credit criteria that the banks look at to qualify you. The most important, which most people recognize and understand, is a FICO score. And although the FICO score is a very important entity on your report and what a bank would look at, the contents of your report that make up the FICO score are just as important, or maybe even more important. You have various categories on your report that make up your FICO score. Number one is the time of length that you've been in business. That you've had credit. That's your credit history. The next item, it would be for credit cards, your utilization. Utilization is the number compared to, for example, if you have $1,000 credit limit, your utilization should be no more than 33% of the available credit that's been issued to you. That's a big problem, a lot of people, because they overutilize their credit cards. The next thing that they look at is your type of credit. The mixture of credit on your report also makes up your FICO score. Your length of time on your job, or your salary, which is your debt to ratio. How much debt do you have compared to the amount of income that you're bringing in? So those are the major things that a bank looks at before they can make a determination to even offer you any type of financing.
So you had mentioned that the utilization is what you see a lot of issues with. So people are using, basically they have too much debt to income. Is that what you're saying?
Well, no, the utilization means that when a bank looks at your credit cards that you have and the credit limit that you've been allowed or provided to from another lender, when you have a high balance, for example, if you have $1,000 credit limit and you've used $900 of that, okay, that it is if you're using your credit cards to live off of. And that's not a good thing. Your credit card, the purpose of a credit card is temporary credit. It's not to consistently stack up and charge up a lot of stuff on your card. A credit card is used to temporarily charge an item that you're going to take care of the next month or whenever your next pay period is. So the more you pay on that balance, the less utilization you have for the credit limit that you've been allowed.
Okay, understood. Now, I'm sure we're dealing with this coronavirus right now, and I'm sure that a lot of people are charging up their credit cards because they lost their jobs.
Yeah, this is an emergency situation, so it's going to be looked upon a whole lot differently. But in normal situations, when the economy is right and people are not losing their jobs, and we don't have a pandemic going on, these are the things that the banks are going to look at before they would issue you any type of credit offer.
Okay, so you think they will take that in consideration that we have a pandemic and that's why it decreased, and they'll look over that possibly and
Well,
extend credit?
can't say for sure because when it all boils down and it's, and everything is and back in somewhat normal operating situations, it's still gonna play a part of your credit because you may end up being debt heavy compared to what you're actually bringing in. Even though they gave you the credit based on your income and all that, the expectations was not for you to go out and max out your cards and then not be able to pay for them within, or pay them down within a certain length of time.
Okay, so it's safe to say that, if you are racking up debt, get your debt paid first before you attempt to apply for a loan or get a home or.
I would say the first thing you want to do is just make sure that your credit cards are within the limits that the banks want to see. Uh, and of course, the more that you're asking for to borrow, the less that utilization needs to be. You know, so the more you're asking for, the lower your utilization needs to be.
Should you use your personal credit to establish business credit?
Well, that's a good one because you really don't want to. However, most people that start out opening up a business, they have to use their personal credit, but you want to limit yourself to doing so as much as possible. You want to do your research to find out what credit card companies or banks will allow you to acquire credit under your business name. Now, you may not end up having or getting a whole lot of credit because you haven't got anything established under your business. So what you want to do again is look into the different sources that will allow you to have business credit without a reporting on your personal credit report. And although that may be an option for you, there's nothing set in stone that's going to not prevent a bank from reporting on your personal credit. So it takes a little homework, it takes a little knowledge, it takes a little, taking your time to figure it all out. But then, of course, that's what we're here for.
Oh, okay. All right. So we can hire you to do that.
Yes, we know. We pretty much know the banks that will not report to your personal credit once they've issued you credit. We also know that in the course of getting that credit, they're going to still look at your personal file because you have no business credit for them to look at to make a determination. So based on the type of business that you're going to open or have established, along with your personal credit, it's going to determine again how much credit they allow you to have. In the interim of them doing so, they're going to look at your personal credit profile. The good thing about that is you can have that inquiry removed after you acquire the credit because it is business related.
Oh, really? I thought you had to, so you don't have to wait a certain amount of time to have that inquiry removed?
No.
You can do it immediately?
Yes.
Oh, really? And that only applies to business, not personal?
Correct.
Oh, okay.
Now, on the personal side, you can have it removed as well, as long as you were not issued credit. But if you were issued any type of credit and you then try to remove that inquiry, you may end up losing that credit line because now you're telling that bank or that lender that you didn't give them permission to look at your credit.
Okay, so if you get an inquiry, if you are trying to apply for credit, you get an inquiry and you were denied, they didn't establish credit for you, you can get that removed?
Yes. So if I go out and I apply for a Sears credit card and Sears denies me credit, I can have that inquiry removed.
Wow. So you would dispute that through the credit bureau agency?
Correct. There's the certain formalities that most credit repair companies would use to have the inquiry removed. There's a lot of self-help directories out there that can also guide you on doing your own inquiry removals.
Okay, so that would that be a letter or just is there a form that needs to be filled out? to the credit
It's normally
bureau?
a letter. It's normally a letter, a formal letter that has the proper legal verbiage in it that encourages the lender or whomever you're applying for credit to remove it off your file.
Okay. All right. That sounds good. And I'm sure a lot of people aren't aware of that, or they've heard it and they just haven't, taken the steps necessary to clean up their credit. So that's good to know, because I did not know that if you're not extended credit, you can dispute that and have that removed, because I looked at my credit bureau report and it had like a list of inquiries on there from a long time ago. Like, it just never came off like it was supposed to. So it's good to get a copy of your credit bureau report to see what's on it.
Oh yeah, absolutely. And I encourage individuals to look at their credit. Especially in the climate we have today with all the scams going on, it really would benefit you to have a monthly subscription to look at your credit report every month, because you never know what's going to go on there that really should not go on there. Someone may be using your credit, you're aware of it, and then all of a sudden you want to go out and get a loan or buy a home or something like that. All of a sudden, bing, bing, bing. Now you find out you have an issue with somebody has used your credit and they've screwed up your FICO score, your history. There's a lot of things can happen. So people kind of stray away from wanting to pay money out to help themselves, which is one of the biggest problems in this industry that I found out since I've been in it, is that people want something for nothing. They don't want to take the time to make sure that their credit histories been maintained properly. They don't want to take time to understand how to maintain it. They don't want to pay the cost to monitor their credit reports and things like that. They want everything free. And of course, there are some good free monitoring services. Don't get me wrong. However, you will most cases you will get better servicing when you pay for something.
So people need to get out of that mindset. Um, I don't want to pay for this. And you know what? I used to have that mindset until I really buckled down on making sure that my credit was up to par. We didn't want bad credit. My husband didn't want bad credit either. So we did whatever was necessary. So we did sign up with a subscription, and it is so inexpensive. I mean, I think it's like $8.99 a month or something like that.
Well, first of all, you can get a free credit report just about from every source out there that offers a good monitoring service for you. One that we've used many times in this industry is Credit Check Total. They charge you $1 for 7 days of free access. They have Privacy Guard. They charge you $1 for 14 days of access. Then you have Identity Q. I believe they charge $1 for 7 or 10 days of access. So there are a number of different monitoring services that you can sign up with and get the free service to get, to start off, just to see how it works and to look at your credit. And at that time, if you decide you want to keep a monthly monitoring, you can. There's some that offer it every quarter. So whatever you can afford or want to afford to pay for, just do it. I mean, it would save you a lot of heartache and headache in the long run, because you now know what's on your report before you try to go get credit. You need to know where you stand before you ask for something. And again, it's not always about your FICO score. I get clients all the time. Oh, I got a 7 this, I got a 680, I got a, that's all good and dandy. But what is the content of the report that makes up that score? Because just because you have a high FICO score does not guarantee you're going to get financing. There's a lot of other things that go into play. So, you just need to educate yourselves, be prepared as much as possible, and do what you need to do in order to achieve what it is you're trying to achieve.
Do we need a business plan before we approach a bank and ask for funding?
No, that used to be old school. You don't need a business plan to acquire small business loans. The only time you need a business plan is when you're going over a certain amount of requests, like a 250, 300,000, whatever, and you go into one location or one bank to acquire that funding. Because there are so many different ways to get funding. In most cases, we have a client, for example, that'll come to us and say they're looking for $150,000 for business credit. Well, we're not going to just apply with one bank and ask for $150,000, Because if we do that, that's going to trigger them to ask for certain documents that I know that client doesn't have, which would be a financial statement or a tax return or bank statements that are showing a certain amount of revenue that's flowing through their business. So what we do, we go to a number of banks and ask for small amounts, and those small amounts don't require certain documentation. So you don't need a business plan. You won't need a financial statement. You won't need a tax return. In most cases, you won't need a bank statement. You'll just need your FICO score that's demonstrating your capabilities of paying the loan back, and of course, a description of what your business does, and an estimation, which is called, in other terms, it's stated income of what your business would generate based on the type of business you have, for that bank to then determine to give you some type of financing. So that's called stack financing, using more than one source to accomplish your funding goal.
Now, you mentioned that you go to different banks and ask for small amounts. Will that affect the inquiries or affect your credit score if you're going from bank to bank and the bank sees, okay, I see you went to this bank, to this bank, to this bank? Does it raise any red flags?
After a certain period, yes, it will. But the way we do it is we normally would apply on the same day to a number of banks.
So you can't see it.
So they're not going to necessarily see that inquiry on your file. And because we're not going to go to, tons of locations, maybe, and before we backing up on that and talking about inquiries, which I didn't mention earlier, that also is an impact on your score. Before we even attempt to get you any type of financing, after we looked at your credit report, if there's an abundance of inquiries on your file, we know that we can only do so much. So because banks normally, not all banks pull from the same bureau, we know what bureaus they pull from. So for example, let's say that you have 4 inquiries on Equifax. Let's say you have 3 inquiries on Experian. Let's say you only have 2 inquiries on TransUnion. We now know we can go to TransUnion, the 3 different banks that pull TransUnion. We can go to maybe 2 banks that pull from Experian, and maybe only 1 bank that pulls from Equifax. Why? Because you have already other numbers of inquiries on your file. Banks do not like to see any more than a minimum or a maximum of 6 inquiries on your file within a 6-month period. After 6 months, those inquiries, even though they're still on your file, they have little to no impact with applying for additional credit. That's why you always hear people say that once you get a credit card or get some line of credit or whatever established with the bank, they will automatically, in some cases, offer you additional credit or a credit increase because you've done 6 months of business with them. And any inquiries that were 6 months or less, or 6 months or more, have little effect on their decision making with your request for financing or a credit card. So I hope I answered your question.
Oh, yes, you did. You answered and provided even additional information.
Okay.
So you had mentioned there was 3 credit bureau reports. Is there a 4th credit bureau?
There are a number of credit bureaus that are out there. Different companies use different bureaus, but the main ones are Experian, for your personal, Experian, Equifax, TransUnion. For business, you have your Experian, you have Equifax, Small Business Finance Exchange, Dun & Brad, and PayNet. PayNet is a lease. So for personal, you have 3 main sources they look at or can look at, and for business, there are 5, depending on what type of funding or financing you're looking to do. On either side of the table, there may be other bureaus that people or businesses use to review your credit to make a decision on, but those are the main ones. Okay. Experian is the most used on both sides of the fence. Equifax is the second. TransUnion is the least. on the both sides of the fence. Even though you don't have TransUnion on business funding, you do have it on personal.
Okay. And can you explain, I just thought about something when we were going over the different credit bureau reports. Can you explain um, about using the middle score? I don't know if people understand that. You know, they go to apply for a loan, they've checked their credit bureau report on Credit Karma or something like that, and they think they have an 800 score. Well, then
Well, a middle score is normally only used in the mortgage industry. It's not normally used on any other type of funding or financing. It's primarily used in the mortgage industry. And the reason why is because the mortgage industry looks at all three bureaus. That will just look at one.
so when you're looking at your credit score on Credit Karma, is that credit score true? Because I
No,
know, okay,
no,
let's talk
because
about that.
okay, so when you with your credit monitoring, you're getting a consumer report, and a consumer report is a compressed report that's only going to provide you limited information. When you go to a bank, they're doing what they call a tri-merge report, and that tri-merge report has a whole lot more detail of information than you will ever see on a consumer report. And the other thing as well, different monitoring companies use different algorithms to comprise your score. There's a Vantage and there's a FICO. FICO has many levels of scoring capabilities and algorithms that banks use to formulate your score. Right now, I think it's FICO 8 or 9. I think is the one that they mainly use. And most banks use FICO scoring. So with the different monitoring services that you may look at, your score may be excessively higher from one monitoring service than the other because they're using a different FICO scoring or credit scoring system to determine your numbers. And that's a very complicated algorithm that, I can't even explain.
Okay. And are there items on the credit bureau report that cannot be removed
Uh,
in a dispute
over the,
process?
over the years, okay, so the process of removing an item from your report can be very complex, and that depends on who you're going to get the credit repair done. For example, a bankruptcy is done a whole lot different than a regular charge off or a late pay or something. And there are different types of levels of removing information. You can just move the top layer, or you can go deep and remove all the files that have to do with it. In other words, when you do a bankruptcy, it goes out to so many different components within that bankruptcy filing. It doesn't just go to, category A. It's going to go to A, B, C, D. It may go as deep as F or G. And I'm losing my train of thought and the terminologies are in reference to that. But just know that when you have a credit repair done, who's doing it and how they're doing it weighs a lot on the results of it being taken off your report.
I think that would be just like that's a perfect place to end, because I'm sure we can go on and on and on and on.
Yeah, I love talking about this stuff. We could be on here forever.
You know what? Before we end, I just thought about something. What is something that you would like to tell someone that's getting ready to, start a business or purchase a home? What would be your advice as far as transparency and providing the information that you need so that you can help them?
Well, the most important thing that I always tell my clients is, if you're not prepared, don't come ask for something that you're not going to qualify for. Yeah, there's a lot of tricks to the game and this, that, and the other. That goes with anything out there. But on the average consumer, a person that's trying to acquire credit or trying to get a home or whatever they're trying to do that has to do with borrowing money, you really need to understand the depth of what you're trying to achieve and how to do it in the best way you know how. if that makes any sense. So when you come to me, all I ask you to do is just be honest and straight up. Don't come to me with paychecks that don't belong to you or have been, monitored.
They've been edited, or what do
Yeah,
you call it? They've been fraudulent.
yeah,
That's
fraudulent.
fraudulent.
You know, I've had that happen a number of times.
Oh,
Just a couple of weeks ago, a young man came to me. He was trying to get a loan, and his representative, which was another broker, sent over his business bank statements, and they looked really nice, and I submitted it to the lender, and they were ready to move forward, and they wanted to log into his bank account to verify that those were his numbers. Find out that would have been a manipulated statement. you know there are some lenders that don't go that far into looking at certain things on your report. All I ask you is just to be honest with me, so I'll know what to and not what not to do before I start wasting my time assisting you to get the money that you may not, in most cases, even qualify for.
okay. And how can they reach you? How could someone reach you if they need your
Okay,
services?
well, to reach me, our phone number is 800-785-8103, and my direct extension is 201. We're open Monday through Friday from the hours of 9 a.m. until 6 p.m. Sometimes we're here even later, but that's the time you can call us, between 9 o'clock in the morning and 6 o'clock in the evening.
Well, thank you, Ashley, for your time. We appreciate your knowledge and your expertise as it relates to business and credit and establishing credit. And we look forward to more conversations.
Absolutely. Thank you so much. I appreciate being on your show.